In part 1 of this video, we covered the first 21 questions in the employee section, which included the current number of employees at the company, the number of new full-time employees it is proposing to hire per year, and the minimum and average wages for its new employees. In part 2, we will cover questions 22 through 57, which consist of the base year and calculating employment on an annual full-time equivalent basis. Let's go over the definitions of base year and annual full-time equivalent. The base year is the company's taxable year immediately preceding the taxable year in which the application is submitted. In other words, if your business's current tax year is 2017, the base year would be your 2016 tax year. Note that the 2016 tax year may be different from the 2016 calendar year if your company files its tax return based on a fiscal year. An annual full-time equivalent, or AFTE, is a method of accounting for full-time employees that worked or will work less than a full year during the company's taxable year. The annual full-time equivalent is calculated for you by the application. However, it is helpful to see how this number is calculated in order to understand how the application generates the aggregate employee compensation. As a reminder, here's the definition for aggregate employee compensation. Additionally, an annual full-time equivalent is based on a 1,750 hour or 50-week year, depending on whether the employee is an hourly or salaried worker. Let's go over a few examples of annual full-time equivalency. Example 1. One hourly full-time employee is hired approximately halfway through the year and is expected to work 1,040 hours. 1,040 hours divided by 1,750 hours equals 0.59. So this employee counts as 0.59 of an AFTE in the year he is hired. If the employee remains employed all of the next year, he will count as a full 1.0 AFTE. Example 2. 4 full-time employees will be hired at various points next year. 2 hourly full-time employees are expected to work 400 hours each, and 2 salaried full-time employees are expected to work 20 weeks and 25 weeks respectively. If we take 400 times the 2 employees, we get 800 hours. 800 hours divided by 1,750 hours is equal to 0.46 AFTE. Then we find the AFTE for the salaried employees. 20 weeks plus 25 weeks equals 45 weeks. 45 weeks divided by 50 weeks gets us 0.9 AFTE. Finally, we add the two together to reach 1.36 AFTE. Example 3 will be an example of the base year, which is the most previously completed tax year. Since this year has already been completed, the company has payroll data to determine the exact amount of time each employee worked. The company employed 5 salaried employees in its base year. Of the 5 salaried employees, 3 worked the whole year. The 4th salaried employee retired on June 30th and worked exactly 26 weeks. Her replacement was hired and started working on August 1st. The replacement worked 20 weeks. As you can see, the 2 partial year full-time employees accounted for a combined 46 weeks. 46 divided by 50 equals 0.92. In other words, these 2 partial year full-time employees count as a combined 0.92. So, this employer has 5 people who worked in 4 different positions who collectively counted as 3.92 employees on an annual full-time equivalent basis. Now that we are familiar with the base year and calculating employment on an annual full-time equivalent basis, let's calculate Widget's base year. Question 22 asks for the number of hourly full-time employees the applicant employed in California for 1,750 hours or more during the applicant's 2016 tax year. Notice how the verb has changed from hired, as used in the first 21 questions, to employed. In order to complete the base year, Widget needs its payroll records from its most recently completed tax year in order to separate its employees into 4 categories. Hourly full-time employees that worked at least 1,750 hours, salaried full-time employees that worked at least 50 weeks, hourly full-time employees that worked less than 1,750 hours, and salaried full-time employees that worked less than 50 weeks. Once Widget separates its full-time employees from the previous year into the 4 categories, it can now fill out the base year. Widget had 5 hourly full-time employees in 2016, all of whom worked at least 1,750 hours, so Widget enters 5 into question 22. Widget did not have any salaried full-time employees, so it enters 0 into question 23. Since no hourly employees worked less than 1,750 hours and it had no salaried employees, Widget enters in zeros for questions 24 through 27. The bolded number below question 27 is the annual full-time equivalent calculation. Based on Widget's information, the AFTE for 2016 is 5, since 5 employees worked the entire year. Let's repeat the process for 2017, separating each employee into the 4 categories. Widget has the same 5 hourly employees still working for the company and predicts them to work all of 2017, so it enters 5 into question 28. A common question we get is, what if one of the employees quits unexpectedly? How does that affect our company's employment? You would account for this position by answering the questions in the application literally. Make sure you account for all full-time employees that worked full-time, whether they worked a partial year or the entire year. Please use actual payroll data when entering this information for your base year. As a reminder, if your company experiences a significant amount of attrition and/or turnover, you should account for this in the application. For example, let's assume that you have 5 full-time positions and you know, based on looking at your past employment history, that in a typical year, one of these employees will leave. You also know that it takes about 2 months to recruit, interview, and replace that employee. That would mean that, on average, one of these positions is vacant for 8 weeks a year. 8 divided by 50 is 0.16. So on an AFTE basis, in a typical year, you would expect to have 4.84 employees. Widget is projecting that it will not have any salaried employees for this tax year, so questions 29, 32, and 33 are all 0. Widget plans to hire 3 hourly full-time employees that will start halfway through the year, so it puts 3 into number 30. For question 31, Widget will need to convert the amount of time into hours that all of the full-time employees are projected to work in 2017. Widget's full-time employees work at least 35 hours per week and will be working approximately 25 weeks in 2017. So if we multiply 35 hours by 25 weeks, we get 875 hours per employee, which multiplied by 3 is 2,625 hours. Now we have the 2018 tax year. Although Widget will not be hiring in 2018, let's look at how the AFTE changes. Widget will have the original 5 full-time employees that are projected to work all of 2018. Also, the 3 employees that were hired in 2017 are now predicted to continue working and will work all of 2018. So, all 8 full-time employees will work at least 1,750 hours in 2018. As a result, Widget enters 8 into question 34. Notice how the AFTE changes. Although the headcount in both 2017 and 2018 is the same, with 8 full-time employees working, the AFTE for 2017 is 6.5, while the AFTE in 2018 is 8. Because 3 of the employees only worked half of a year in 2017, the annual full-time equivalent is only 0.5 per person. Now that all full-time employees are projected to work an entire year in 2018, each full-time employee counts as 1 annual full-time equivalent, raising the AFTE to 8. Let's move to 2019. Widget will not hire any hourly full-time employees, but it expects all hourly employees to remain on the payroll, so it puts 8 into number 40. Widget actually plans to hire a salaried full-time employee in late 2018, but no later than January 1st, 2019. So to be safe and maintain some flexibility, Widget is projecting that the salaried employee will start in the first week of 2019 and will work the whole year, so it enters 1 into question 41. Since it does not anticipate that any full-time employees will work less than 1,750 hours or 50 weeks, Widget enters in zeros for questions 42 through 45. For both 2020 and 2021, Widget does not plan any additional hiring, but it does expect all its current full-time employees to continue to be employed for the entire year or for the positions to be backfilled immediately if someone quits. So Widget carries forward the current 9 employees in the remaining 2 years, entering 8 and 1 into questions 46, 47, 52, and 53, and zeros for the remaining questions. The application then generates the aggregate employee compensation, which is $780,000. Now that we have covered an example of the employee section, let's run through a second scenario for Widget. In this instance, Widget will have a larger workforce, and we will focus on the complexities that can arise from having more employees, particularly in the base year. Widget had 50 full-time employees in its 2016 tax year. 2016 is Widget's base year. Like the previous example, Widget separates its employees into the 4 categories. 22 hourly full-time employees worked 1,750 hours or more. 7 hourly full-time employees worked less than 1,750 hours. 17 salaried full-time employees worked 50 weeks or more. And 4 salaried full-time employees worked less than 50 weeks. Of the 7 hourly full-time employees that worked less than 1,750 hours, 5 were hired over the course of the year, 1 employee quit after working 640 hours that year, and the last employee was hired shortly after to replace the employee that quit, working 1,120 hours. The number of hours worked by the 7 employees, which includes the 5 hired employees, the employee who quit, and the replacement, are represented in the chart below. Using its actual payroll records from its 2016 tax year, Widget was able to calculate that its hourly full-time employees worked a cumulative total of 5,968 hours in the base year. Of the salaried full-time employees that worked less than 50 weeks, 2 were hired over the course of the year, 1 employee quit after working 38 weeks that year, and the last employee was hired 4 weeks later to replace the employee that quit, working 10 weeks. The salaried full-time employees worked for a cumulative total of 88 weeks in the base year. For the next 5 years, Widget plans to hire 25 new full-time employees. There will be 3 hourly full-time employees and 2 salaried full-time employees hired per year. The hourly full-time employees are anticipated to work a combined 3,200 hours per year, and the salaried full-time employees are expected to work a combined 70 weeks per year. Now that we have gone over Widget's base year and hiring for the next 5 years, let's fill in the annual full-time equivalent section. Widget currently has 50 full-time employees and no part-time employees. Widget will hire 5 full-time employees per year with a minimum salary of $35,000 and an average of $40,000. In other words, each employee will make at least $35,000 per year, and all 5 combined will average at least $40,000 per year. While Widget may pay some employees more, as part of its application, it is committing to pay its new full-time employees a combined average of at least $40,000 per year. We repeat 5 employees per year at $35,000 minimum and $40,000 average until question 21. Moving into the base year, Widget had 22 full-time hourly employees that worked 1,750 hours or more, and 17 salaried full-time employees that worked 50 weeks or more. For question 24, Widget had 7 hourly full-time employees that worked less than 1,750 hours. If we refer back to the chart, we can see that for question 25, the employees worked a total of 5,968 hours. For question 26 and 27, there were 4 full-time salaried employees that worked a total of 88 weeks. This gives us 44.17 employees on an annual full-time equivalent basis. In 2017, Widget will add 3 hourly full-time employees and 2 salaried employees, but before we add these 5 employees in, let's answer questions 28 and 29. Looking back at the base year, there were 7 hourly full-time employees that did not work a full year. If you recall from the earlier slide, 5 of these employees were hired in 2016, 1 person quit, and 1 person replaced the employee that quit. Because 6 of these 7 employees will continue to work at the company, we have a net increase of 6 hourly full-time employees, resulting in 28 hourly full-time employees for question 28. Applying the same process to question 29, 3 of the 4 salaried employees will continue working at the company, resulting in 20 salaried employees. Now let's add the new employees. Starting at question 30, Widget plans to hire 3 hourly full-time employees that will work a total of 3,200 hours per year. Additionally, Widget will hire 2 full-time salaried employees that will work a combined 70 weeks per year. From 2018 forward, Widget repeats the same process, adding the net increase of 3 hourly employees and 2 salaried employees to the first 2 questions and inputting the same hiring information for the next 4. This results in an aggregate employee compensation of $3.4 million.